forexbrokers.net, and we continue the 3 videos dedicated to a better understanding of Bollinger Bands Indicator. So far we explain the role of the 3 bands, the middle Bollinger Band, the lower Bollinger Band, and the upper one, and we covered a strategy called the 2 with 2, with the 2 bearish candlesticks followed by 2 bullish candlesticks in a rising market to add on the MBB interaction, and with 2 bullish candlesticks followed by 2 bearish candlesticks on the MBB interaction on a bearish setup. Another trading system or setup, very interesting with the Bollinger Bands, is to look for a break out of the ranges that the upper Bollinger Band and the middle Bollinger Band shows. For instance, the idea of this strategy is that if the price remains contained between these bands for over 95% of time, then when it reaches the extremes, it signals the possibility of or the probability of a trade in that direction or in opposite direction if there are conditions to met. The rules of these systems are explained clearly in the article. We need what? We need one candlestick that goes and breaks through from the NBB to the upper Bollinger Band or the lower Bollinger Band in a bearish situation. So to break out of these Bollinger Bands, to close out of the Bollinger Bands, and then the subsequent price action to follow, to not to close above or below the upper Bollinger Band or the middle Bollinger Band. And then suddenly one candlestick, which is the entry candlestick, this one right here, doesn't touch the upper Bollinger Band but opens above the middle Bollinger Band and closes below it in a bearish signal. That's the bearish entry right here, signaling downside for this is the euro and Canadian dollar on the daily chart. Now let's see some examples on the silver chart. This is the 4-hour chart, the 4-hour time frames on the silver chart, and there are 4 instances that appear on this chart. What do we have? We have one candlestick that reaches or touches the MBB and closes below the middle Bollinger Band, and the subsequent price action that follows is formed out of small candlesticks here that do not touch the MBB or the lower Bollinger Band like this, all the way until there is one candlestick that opens below the MBB, closes beyond, and that's a signal to go on the long side, right here. Now whatever follows here could be a reversal of that signal. What does it mean? It means that we have what? We have one candlestick that closes above the MBB, right? Above the upper Bollinger Band. But the problem is that this candlestick here doesn't touch the MBB as well. So this is a false break, if you want, for a reversal, and therefore simply remaining on the long side, waiting for the market to come here. That's the third. On the third candlestick here, is this a signal to go long or not? Well, we see that the candlestick pierces or opens below the MBB and closes beyond the upper Bollinger Band. It is not respecting the entry rule, but even here you have conservative approaches and aggressive approaches. It depends very much on what type of a trader you are. In any case, if the trader decides to take this trade, is alright to add on the long position. But remember, all the trades that we took, or all the setups, should have an appropriate risk-reward strategy, as the reward should exceed at least twice the risk. So this would be the risk, the candlestick involved, or the low at the bottom, and then going for 1 to 2. Here would be a nice place to add, but if not, the market continues and gives another signal to the upside as it opens below the middle Bollinger Band, closes above without reaching the top here, so that's another signal to go on the long side to add on the trade. Another example used in the article is the Dow Jones Industrial Average, the daily chart, and the setup starts somewhere around here. The market breaks lower, closes below the lower Bollinger Band, touches or while touching the middle Bollinger Band, and then continues, achieves or reaches the middle Bollinger Band, opens below, closes above. That's the entry signal for a nice trade to the upside. Do we have a bearish signal here? No, for the same reason as discussed on the other setup. This candlestick here, while closing below the middle Bollinger Band, it touches the lower Bollinger Band, which would be an aggressive or a conservative decision for the trader to make. Just like in this case here, this one, if you decide to take it, for instance, it will be rewarding. In this case, if you decide to take this one, it will still be rewarding, but the bullish setup was still in place. So either taking this one or booking the profits from this one, taking this one on a 1-to-2 risk-reward ratio. But then when the real signal comes on the long side, remember here we are bullish on the long side because of this break and this break here. So on this candlestick, again, on the long side, the market consolidates and moves forward and so on. So with these two examples, we've covered the second strategy on how to use the Bollinger Bands Indicator. And yet there's another one quite interesting, how to trade the Bollinger Bands as a volatility indicator. Stay tuned for the next one. Bye bye.